Hello and welcome to this week's Forex Outlook here at xm.com. I'm Andras, your EU currency analyst, and I'm here with my colleague Rafi Boyajan. So Rafi, the dollar index is up by 1.25% ahead of the advanced estimate of third quarter GDP growth out of the US. This 1.25 weekly rise constitutes the index's largest gain of the year. The US currency has been boosted by developments on the domestic front, specifically the tax story gaining momentum. Also reports that Republicans are favoring John Taylor to lead the Fed. He's perceived as an inflation hawk, but it's been also supported by weakness in other currencies. For example, the euro has significantly retreated relative to the dollar after the ECB's perceived dovishness following the completion of its two-day meeting yesterday. But let's move on to next week. What should we be looking for out of the US?
Well, next week we have the FOMC meeting on November the 1st. That's on Wednesday. That will be followed by the non-farm payrolls report for October on Friday. The Fed isn't expected to make any changes to its Fed funds rate when it meets next week, although it is looking increasingly likely that they will be raising rates in December. But for November, they're likely to stand pat. We just saw in October the Fed starting to scale back its reinvestments of the process from its $4.5 trillion balance sheet. They will want to wait a bit as well because inflation has been on the source side recently. Although economic growth indicators have been surprising to the upside, we saw recent data on durable goods, housing, all of them beating expectations. So we're well on track to seeing a rate hike in December. But it's going to be interesting to see on Wednesday whether or not they're going to change their language in the inflation outlook, but that is unlikely.
And on October 31st, a day before the Fed meeting, the Bank of Japan will be completing its two-day meeting on monetary policy. It is not expected that the central bank will reverse course on its ultra-easy monetary policy. Today, we also had the release of September inflation figures out of Japan. Core inflation rose for the 9th straight month, though it was slightly below expectations. But remaining within central banks, the one meeting that markets perceive as having the highest chance of reflecting a shifting policy is the one by the Bank of England on November 2nd. Can you talk to us about that, Rafi?
That's right. The Bank of England will have its policy meeting on Thursday. They will also publish their latest quarterly inflation outlook. So the forecast at the moment is that the Bank of England will raise rates by a quarter of a percentage point to 0.5%. If they go ahead and do that, that would be a reversal of the emergency cut we had soon after Brexit in August in 2016. But recent comments by senior policymakers, particularly the two deputy governors, there wasn't much support for a rate hike so soon. So we could potentially see a split vote on Thursday. And even if they do go ahead with the rate hike, if it's too close a call, potentially that would be a sign that they're not likely to be raising rates beyond November, and that would be negative for sterling. Although the third quarter GDP numbers that we saw this week, they did surprise to the upside. We saw third quarter growth coming at 0.4% versus expectations of 0.3%. So that supports the view that the UK economy, although it is slowing at a reduced pace, we are seeing capacity being utilized more, and unemployment, of course, let's not forget, is at a more than 43-year low in the UK as well. So that could potentially be enough for the Bank of England to go ahead with a rate hike next week.
And we also have Brexit developments on the background. Thank you very much for your analysis, Rafi. Thank you everyone for watching, and have a great day.